The IMF's latest World Economic Outlook report projects India's FY22 growth at 9%. That's 50 basis points lower than its previous forecast on the back of the emergence of the Omicron variant. But for FY23 and 24, India's prospects are marked up on expected improvements to credit growth and subsequently investment and consumption, building on better than anticipated performance of the financial sector. Now, the global economy that is entering 2022 on a weaker position than earlier expected. Global growth is seen at 5.9% in 2021 and then expected to moderate to 4.4% in the current year, half a percentage point lower than the previous forecast, and is revised up to 3.8% for 2023. The downward revision for 2022 is on the back of markdowns for growth in US and China largely, and the upward revision for 2023 reflects a mechanical pickup. Now, importantly, this baseline forecast is conditional on adverse health outcomes declining into low levels in most of the countries by the end of the year and improved vaccination rates, and assumes the Omicron impediments will weigh on growth only in the first quarter of this year and start fading by the second quarter. Omicron is the most pressing risk to global growth today, IMF says, because even if symptoms are milder, it could cause labor shortages and put a pressure on the health infrastructure. The emergence of new COVID variants, supply chain disruptions, uncertainty around inflation, risks to financial stability with rate hikes in advanced economies are also some of the risks that have been listed out. Now, there could especially be risks to capital flows, currencies and fiscal positions of emerging market economies with rate hikes in the advanced economies. Now, IMF expects at least 3 rate hikes by the US Fed in 2023 and 2022. Now, inflation is expected to remain elevated in the near term and average 3.9% for advanced economies and 5.9% for emerging and development market economies in 2022 and subside by 2023. To combat all of these risks, effective monetary policy communication is going to be key, and IMF warns that with expected higher global rates, the emerging and developing market economies with large forex borrowings and external financing needs should specially be ready for a possible turbulence in financial markets.